We tend to focus on inventories, especially where it matters for the futures contract, which is at Cushing, Oklahoma. And that's a different story there. At Cushing, we've seen months of inventory drawdowns. And so why is that happening? I mean, demand is strong, right? Refineries are gobbling up crude to manufacture gasoline this time of year. Look at the shape of the forward price curve for oil. It's backwardated. So prices for oil today are more expensive than prices in the future. What that means is you're basically losing money if you try to store oil and sell it forward. So with that carry trade closed, with refineries going at near full tilt, we're now a big exporter of crude oil, 2 million barrels a day, sometimes 3. It's no surprise to see inventories lower at Cushing.
Why do we keep hearing then about these inventory builds, these supply builds in the U.S. and globally?
In other parts of the country, for example, in the United States, they are high because of bottlenecks in the infrastructure. You always hear about the Permian Basin, the explosion of growth in the shale plays, but that is a bottlenecked area. It's very difficult to get that oil to market. As a result, the oil accumulates in those areas, and you have big differentials between oil in Midland, Texas, and where it's traded in Houston.
Yeah, we've got this big oil, I guess, we need it here. We have too much there, not enough here, and we can't get it there. That's going to be probably a decade-long fix if we get it fixed at all. So in the near term then, Clay, is the market saying that oil prices are likely just to continue to head lower?
A lot of it depends on geopolitical risk at this time. And so there's a few wild cards to watch on that front, right? You have Venezuela, and they used to be a powerhouse supplying the Americas 3.5 million barrels a day. And in past years, they've done a 1.3 million barrels per day.
It's an economic and, well, as humanitarian implosion.
And
collapse.
It's not, in a place like Libya, it's not like a short-term problem. Like in Canada, something goes offline, they fix it in a few weeks or months. These are structural problems in a place like Venezuela where it's underinvestment in the fields, underinvestment in the associated infrastructure. Those problems will be there for the long haul. Another big wild card is Libya. It ranges from 1 million barrels per day to close to 0 when they have problems.
Because they've been fighting around the ports, been a rebel faction. They're closing down ports for weeks at a time, trying to make a deal. We get the thing about Venezuela, too, that a lot of people may not, if they're not in the oil markets, may not understand is we need Venezuelan oil, do we not? Because it's a really kind of a thick, sludgy type of an oil, which is very good for diesel fuel refining. So it's not easily replaced.
Yeah, I think that's right. It has an effect on the global balance by grade. And so you're right that in the United States, for example, the refining center in the Gulf Coast, Houston, my hometown, those refineries are configured for that kind of heavy oil. The company spent a lot of money to build those upgraders, and that's the kind of feedstock that they look for in many cases.